Welcome back to Stock Explorers, everybody. I hope you're ready for another deep dive.
Always ready.
Excellent. Today we're taking a look at MRA Holdings.
Yeah, MRA Holding is a company making some serious noise in the Bitcoin mining world.
And when I say noise, I mean that literally and figuratively, but we'll get into that later.
Yeah, there's a lot to unpack there.
For sure, for sure. Their revenue growth has been, you just got to look at the numbers. It's
Yep.
impressive. But we're here to go deeper than that.
All right, peel back the layers and see what's really driving their success.
Absolutely. And of course, where there's smoke, there's usually fire, right?
Usually.
So we got to address some of the controversies around MRA2, the legal issues, the noise complaints, and the environmental concerns.
All part of the story.
It's all part of the story. So let's start at the beginning. MRA, they weren't always a Bitcoin mining company, were they?
No, not at all. Their journey to becoming a Bitcoin powerhouse, it's a bit of an unexpected one.
A bit of a plot twist, maybe.
Yeah, you could say that. They were founded back in 2010, but didn't actually step into the crypto world until 2018.
Wow, so almost a decade later.
Yeah, they actually went by a few different names before that and focused on uranium and vanadium exploration and mining.
Uranium to Bitcoin.
Mm.
Talk about a career change.
Right, quite a pivot. But when you look at their financials, it seems to have been the right move, a very lucrative one.
I mean, the numbers speak for themselves, right?
Absolutely. In 2024, their revenue shot up to, get this, $656.4 million. That's a 69% increase year over year.
Whoa, 69% in a year, and that's during a broader market downturn.
Exactly, which makes it even more impressive.
That's not just riding the Bitcoin wave. That's like hanging kin on a tsunami. What's fueling that kind of growth?
Well, their fourth quarter of 2024 was particularly strong. They raked in $214.4 million in revenue.
So they're not just getting lucky. It sounds like there's a strategy here.
Oh, absolutely. Shrewd decision-making and operational efficiency are at play here. A key factor, and you hear this a lot in the Bitcoin world, is their hash rate.
Okay, hold on. Hash rate. Break that down for our listeners who maybe aren't fluent in crypto jargon.
Sure. Think of hash rate as the engine of their mining operation. Basically, it's the processing power dedicated to solving complex mathematical problems. That's at the heart of how Bitcoin transactions are verified and added to the blockchain.
Okay, so the more processing power you have, the more Bitcoin you can potentially mine.
Exactly. It's like a giant digital lottery, and MRA is buying a whole lot of tickets with that hash rate.
So how are they stacking up in this computational arms race, I guess you could call it?
They're coming out on top. As of December 2024, their hash rate hit a massive 53.2 EHs, exashes per second.
53.2. I mean, wow. That sounds like a lot. What does that kind of computing power mean for MRA's position in the market?
It puts them among the leaders in the industry. It allows them to mine more Bitcoin, obviously, generate more revenue, and potentially even have more influence over the Bitcoin network itself.
So it's not just about how much Bitcoin they have, but their position in the whole ecosystem.
Exactly, but it's a double-edged sword. This heavy reliance on Bitcoin mining makes them very vulnerable to, the ups and downs of the Bitcoin market.
Yeah, I mean, Bitcoin is famous, or maybe infamous, for its volatility.
Right. If the price of Bitcoin crashes, it doesn't matter how powerful your mining operation is.
Your fortunes could take a hit. So what are they doing to mitigate that risk?
That's what we'll dive into next. They're definitely not just standing still, hoping for the best. MRA is making strategic moves to diversify its operations, become less reliant on those unpredictable swings of the Bitcoin market. And that's where things get really interesting.
So MRA's got this huge hash rate. They're mining a ton of Bitcoin. But they also know they can't just rely on Bitcoin's price, right?
Right. It's a smart move to diversify, and they're doing that in some pretty interesting ways.
So they're branching out, not putting all their eggs in one basket.
Exactly. One way they're doing this is by selling their own proprietary firmware and control boards to other miners.
So they're not just competing in the mining game, but they're also like supplying the tools.
Yeah, kind of like if a marathon runner started selling their high-tech shoes to the other runners.
Okay, I see. Leverage that expertise.
hmm
And what else are they doing?
Well, they're also tapping into the whole world of artificial intelligence. They're using that powerful computing infrastructure they've built for mining to provide high-performance computing services for AI workloads.
Oh, wow. So from digging for digital gold to powering the brains of the future. I like it.
It's a natural progression. I mean, at their core, they're a processing power company, and that has applications beyond just Bitcoin.
For sure, they're building a whole ecosystem around that. But let's talk about that digital gold for a second. I mean, they're holding a lot of Bitcoin, right?
A lot is an understatement. As of February 2025, their holdings were at 46,255 Bitcoin.
Wow, that's a serious stash.
Yeah.
That makes them what, the second largest corporate holder?
Yes, second only to MicroStrategy, I believe.
But if they're holding all that Bitcoin,
Hmm.
how are they funding these other ventures?
Well, that's where their strategy gets really interesting. They've adopted what's called strategic Bitcoin sales. Basically, they're selling portions of their holdings to generate cash flow.
So they're balancing, right? They believe in Bitcoin long term, but they also need to keep the lights on.
It's a delicate balancing act. They need that cash flow for operational expenses, funding these new growth initiatives, making sure they have enough liquidity.
It's like walking a tightrope trying to time the market just right.
Exactly. And of course, Bitcoin is notoriously volatile.
Yeah, that adds another layer of complexity for sure. But speaking of complexities, we can't talk about MRA without talking about some of the, well, the controversies.
Right, the elephant in the room.
Yeah, I mean, we touched on the legal issues, noise complaints, the environmental concerns. It's all out there.
It's part of their story, whether they like it or not.
So let's unpack some of that. What kind of legal hot water are they in?
Well, back in August 2024, they were slapped with a pretty hefty fine, $138 million to be exact.
Whoa, 138 million. That's not small change. What was that all about?
It was for breach of contract. A co-founder of U.S. Bitcoin Core filed a lawsuit alleging that MRI had violated agreements related to a power acquisition deal, and the court ended up siding with the plaintiff.
So a big financial hit for MARA. And what about these noise complaints? I know there was a lawsuit filed by some residents near their Texas facility.
Yes, that's right. Residents near their Granbury, Texas facility, they claim that the constant noise from the mining operation, the hum of all those computers, is disrupting their lives, even causing health issues.
Yeah, it's a tough situation. I mean, MARA is trying to grow, but it's having a real impact on the community.
It's a classic clash between progress and, the well-being of the people living nearby. And then, of course, there are the environmental concerns, which are unavoidable with Bitcoin mining.
Right? I mean, Bitcoin mining uses a lot of energy. There's no way around that.
Yeah.
And that has environmental consequences. So what is MARA doing, if anything, to address those concerns?
Well, they're not ignoring them, that's for sure. They are taking steps to incorporate more renewable energy sources into their operations.
Like solar, wind, that kind of thing.
Yes, they're integrating solar and wind power into their energy mix. And they're also doing something quite interesting with methane gas captured from landfills.
Oh, wow. So turning waste into energy for Bitcoin mining, that's pretty innovative.
It is, and it's a win-win. It reduces their reliance on fossil fuels and also helps mitigate the environmental impact of those landfills.
Two birds, one stone. I like it. But are they doing anything else? I mean, those mining computers generate a lot of heat, right?
They do, and that heat is often just wasted. But MRA is actually experimenting with ways to reuse that heat.
So, like, what are they doing? Heating swimming pools for the execs?
No, nothing like that. They're looking at things like using that heat to warm residential buildings, maybe even greenhouses. It's a clever way to turn a potential negative into a positive, reduce their overall environmental footprint.
It sounds promising, but is it enough? I mean, Bitcoin mining is energy intensive no matter how you slice it.
It's a big challenge, and there's no easy answer. It really depends on how these initiatives scale and what kind of impact they have on the industry as a whole.
So it's kind of a race against time, a race to make Bitcoin mining more sustainable before, the damage is done.
It is, and for companies like LRAWay, their future really depends on their ability to balance their growth ambitions with their responsibility to the planet. They're walking a fine line.
We've really dug deep into Mario Holdings, haven't we? I mean, they're a fascinating company, pushing the limits of technology, riding that Bitcoin wave, but also facing some serious challenges.
Definitely a mixed bag, a lot of potential, but also a lot of risks.
Now, we've talked about their huge hash rate. They move into selling mining equipment, the AI services, and that whole strategy of strategically selling their Bitcoin to, keep the wheels turning. But can they really pull this off? And can they overcome the legal and environmental hurdles and actually build a sustainable business?
Well, that's the million-dollar question, isn't it? Their high hash rate, it definitely gives them a leg up in the mining world, and that diversification strategy is smart.
It's like they're hedging their bets.
Exactly, not putting all their eggs in the Bitcoin basket, so to speak. But those controversies, those are some dark clouds on the horizon. That $138 million fine, that's a big hit. And those noise pollution lawsuits, those could drag on for a while.
And who knows what other legal challenges might pop up. It feels like they're walking a tightrope.
It is a delicate balance. They got to keep those mining rigs humming to appease investors, but they also got to navigate these legal minefields and then, of course, convince the world that Bitcoin mining can be environmentally responsible.
It's a tall order for sure.
It is. And then there's another wrinkle, something that could really shake things up,
Oh yeah, what's that?
the Bitcoin halving.
Ah, the halving. For our listeners who maybe aren't familiar with that, what is it and why does it matter for a company like MRA?
So basically, every 4 years, the reward for mining Bitcoin gets cut in half. It's built into the system to control inflation, keep Bitcoin scarce. The next halving, it's expected sometime in 2024. And these halving events, historically, they lead to some pretty big price swings.
Less Bitcoin for the same amount of work. So miners have to become even more efficient to stay profitable.
Exactly. It's going to be a real test for MRA, especially considering their operating costs are already pretty high.
Right. They got to find a way to squeeze even more efficiency out of their operations.
And that means managing their energy consumption very carefully, timing those Bitcoin sales just right, maybe even finding some new ways to bring in revenue.
It's a tough game. So the future of MRA, it's uncertain to say the least.
It is. I think the big question, the one that's really going to determine their fate, is whether they can balance those ambitions for growth with their responsibility to, the environment, the communities where they operate.
Can they prove that Bitcoin mining can be a force for good, not just a drain on resources and a source of controversy? That's the challenge.
It is, and it's going to be fascinating to see how it all plays out.
Definitely. So we've covered a lot of ground here, exploring array holdings, their successes, their struggles, the future of Bitcoin mining. It's a complex story with a lot of moving parts. For our listeners who want to dig even deeper, we encourage you to check out the sources we've provided in the show notes. There's a lot of great information out there.
Definitely do your own research, form your own opinions.
Absolutely. And for more deep dives like this, make sure you subscribe to Stock Explorers, hit that like button, and turn on notifications so you don't miss a thing.
And as always, keep exploring, keep learning, and keep asking those tough questions.
Until next time.